is not negotiable. Don't come back and go, oh, I waited 5 more minutes, because I don't want to hear that shit. If they don't move in 2 hours, the criteria or setup for which you took the trade is broken down, they got something else going on. Their contracts aren't straddled right. They're going to make another stop on or a move. Sometimes you'll take it off and you go, damn, I had it right. Sometimes you'll take it off and go, oh, it's stop hunted again. The reason for our setup or the criteria which you took the trade on is now broken down. It becomes a 50-50 gamble. We are not in the 50-50 gamble business. Go to the nearest Indian casino if you want to gamble. Your job is to take high probability setups based on market maker behavior. He shows you an action, you react to it. He showed you stop hunt low, you buy against the retail trend, take it long. He comes back to the level but doesn't take out the low, the trade is still good long. Start the clock over. He holds the second leg at +5 and goes into consolidation for 2 hours, you scratch the trade and give yourself a break. Okay? That's the rules. They're not negotiable. Write them down. There are 3 market makers strategically positioned around the world. One for each time zone. Some have 5 desks. Some have 3 desks. But for the most part, they work about 6 to 8 hours a day. Here's the difference. You're one guy. You put your trade on. You lift your stop. You sit there like a moron and nurse it for 3, 4, 5 days. These guys go about their business. They're unaware of the suffering that you're putting yourself through. They're unaware of the fact that you've been drinking Red Bull, punching your wife every day because you're in the wrong trade, and sitting there like an idiot waiting for it to come back. If you get jammed up at the midweek reversal, you can forget it for 3 to 5 days. If you get jammed up at the midweek beginning or at the false move week beginning on Sunday, Monday, you can forget it till Wednesday or Thursday. They don't come back to the levels to release the traders because that's how they make their money. So if you sell into the stop hunt down, you got 2 to 3 days of rise before you're going to even see a chance of getting out. If you buy at the high of the week, Wednesday, when they make the first leg of the M, and you buy long at the top at the worst possible place, which people do, by the way, there's a whole system based on that by a guy named, I don't need to say it. He takes the breaks of the highs and the lows. I promise you it's not a profitable system. You don't need to waste your time. If you buy at the worst possible point on the chart, unidirectional swing dragging you to Friday into the weekend, sorry about your luck. Buy some Red Bull because you ain't getting out. Our job in this group, in this room of traders, is to identify those extreme points on the chart, take them in the right direction against the herd, and convert a spot to a 3-day swing, or maximize your gains by following the market maker bias. That's it. That's the job. I know it sounds too simple, but when you can understand what they're doing on the chart, it really is. So keep in mind, when you become exhausted, all they do is come in, change shifts, talk to each other. They get started with a fresh set of objectives and targets, and you're sitting there like a nutcase, hoping you don't burn your account down. That's why you've been struggling in this business. I showed you an army of traders against you in a room that unless you understand them, you really have no chance. This week, I will change that for all of us. All right, this is just an example to show you the desks. If you look right here, they got 1, 2, 3, 4, 5 desks. They got some pretty good coverage, man. They're up Chicago, New York, London, Hong Kong, San Francisco. How are you, one human being, going to trade against 5 desks that are all fresh, feeling great, come in their suit, drive to work in their Bentley convertible, and you're exhausted sitting there nursing a trade, trying to get what you had back? It's very tough if you don't understand. All right, same thing. Here's their coverage. 3 desks. See them? 1 for each time zone. 1 for each session. Okay. An extended rise by the market maker of 3 levels. The levels are not going to be stair-step, but when they are, it's game over. The levels can be described as bursts or movement in price. If you notice something about the charts, they will have an aggressive move come into consolidation. An aggressive move come into consolidation. An aggressive move come into consolidation. The consolidation zones are put there to trick you, and I'll talk about it. An extended rise of 3 levels will always bring a correction. Think, a market maker lent out his money, lent out his money, lent out his money. Shit, I'm running out of money, I need some back. Correct. On the drop, I buy from the sellers, buy from the sellers, buy from the sellers. Man, I'm running out of money, I need some back. Let's get a quick rise out of here. Get my orders back. On the counter trend trades, the 50 EMA should be used as your take profit. The 200 EMA, which lags and will be about the middle of the range, will offer the second take profit. The middle of the range is known as the 50% fib. All you have to do is subtract the high from the low and divide by 2. Take the high number minus the low. The high of the day, whatever that price is, minus the low of the day, gives you 100 pips to make it easy. 100 pips divided by 2 is 50. If the price is moving down, add 50 pips to the LOD, low of the day. That's your fib retracement. Okay? Okay. I'm going to talk about the cycle that I talked about in my presentation, but I'm going to be much more detailed, and we're going to go over that after the break. Let me finish this slide. Actually, I'll break here. It's a good place to break. All right, I'm back. Hope you guys are doing okay. Is 7 minutes long enough? What we're going to do is, I never really went over the agenda tonight. We'll do 7-minute bathroom breaks every hour, and then we'll do about a half-hour break around 8:30, something like that. No, it's already 7:20, so maybe 8:30. Enough for you to grab a little something to eat, and then we'll finish out the night. And we'll have one more 7-minute break, and we'll go through. Okay, that's pretty much how I lay it out. That's the same way we lay it out for the live venue, also. Okay. Hey, Mike, how you doing? Asubio, nice to see you. All you guys, nice to have you here. Okay. I left off talking about the pattern. I'm going to draw for you just like I do in the presentation, but I'm going to be much more detailed, and I'm going to cover the market timings, which are very important. Take notes. The first 2 days, and now especially, I'm going to lay out the structure and the behavior that these guys do. Then the last 2 days, we're going to break it down and help you to identify it on the chart. So what I'm saying is the first 2 days are vital. The chart stuff, if you've been trading, is going to be easy for you. The trick is to dump your old baggage and open your mind to the next couple of days of material and allow it to settle in and sink in and become part of how you think or how you know the market works out. Okay? All right, so look, I talked about the daily setup. There's the accumulation phase. They set the initial high and low, the IHOD and the ILOD, the initial high of the day, initial low of the day. Okay, write these terminologies down. The stop hunt, we call SH, abbreviated, is the false move against their real intentions. That is the move that for years, people that didn't know me and know me now thought was momentum as breakout trading. When they saw the spike, the aggressive move, they thought that was the breakout or thought that was momentum in the marketplace. Some people want to print the slides off the screens. Look, we're grown. I can't stop you from recording and doing stuff. I don't issue a textbook because I don't want this stuff floating around in the form of a book. If you do something like that, first of all, I don't want to hear about it, and second of all, please respect the student agreement and my wishes. Don't let this stuff show up on the internet. Okay? Alright. Yeah, I'm sorry, man. I was supposed to make it full screen, go back in the slideshow mode. I don't know what I was thinking. Thank you for reminding me. Okay. Alright, so the stop hunt is the false move against the real intentions, what everyone perceived in regular technical land or regular technicals as momentum in the market, but it is in fact a trap move to get the traders to validate the wrong way. The real move in the Forex business is slow. Slow and steady rise, slow and steady drop. If you've ever been in the right move with the wrong position, it just seems like it goes on forever and ever and drops, and you start drawing, I don't know, people tell me, I draw a fib and I hope it holds, it goes through it. I draw a support line, it doesn't hold. I draw a trend line, it doesn't hold. It's a slow and steady, relentless move. Because market makers are all in. It's on all their volume. They're aggregated all in. And that slow and steady rise or slow and steady drop is them booking a profit. Market makers always end the day off of the low or the high, 25 to 50 pips, and go back into consolidation to trap the traders. Gerald, it is what it is, man. Okay, now, there's some other nuances in here that I want you all to write down. I'm going to try to draw on GoToMeeting. If not, I'll switch to Paint. Okay, keep in mind, I failed third grade art. Okay, let's start here. 5 p.m. Most dealers reset the high and low. Okay, some of you have seen this already, some of you have seen it but in the presentations, but you have not seen it to the detail that I'm going to give it now. So be patient with me. Take notes. This drawing is the entire business in a nutshell. So if you were texting on your phone, you got the TV in the background, if you pay attention to anything, pay attention to this section. 5 p.m. the high and low reset. Market makers make the quick push, right? 15 to 25 pips up, 15 to 25 pips down, and consolidate. This initial move sets the initial HOD, the initial high of the day. All times are 5 p.m. New York time. All times are Eastern Standard New York, okay? NYC time. Sorry about that, okay? This move also sets the initial low of the day. You Craig Harris guys call this the Tokyo channel. It's simply the market maker spread. Okay? They trade in between this range, accumulating contracts. Anytime you see sideways movement in the market, it's not congestion. I've heard it called so many different things, it's funny. You don't have a chest cold when you're trading. It's not congestion. It's not a traffic jam. Anytime market makers hold a level and move sideways, they are hitting the stops, inducing traders to take a position, and collecting contracts for their pocket. That is it. There is no other explanation for it other than what it is. Okay, now, between 5 and 8 p.m., New York closes at 5 o'clock. There is a thing I've heard it called Dharma. It's the dead time in the market. There is nothing going on. A lot of traders use this time to scalp the market with robots. because it just kind of chops sideways. Let me illustrate this, then we'll talk about questions. From 5 to 8, there's absolutely nothing going on in the market. All exchanges are closed. From 8 to 8:30 p.m., there's a thing called gap time. All times are Eastern New York. Gap time is when the market